It's June 14th, well, almost 15th, and this is video log takes 30,000 to a million. Now, today was not the day that I was expecting. Oh, by the way, this is pretty relaxed, okay? So no edits here, just sit back, relax. We're going to look at some markets, some charts, my account. I'm going to do a review, show you the positions and everything else. So, yeah, no rush. Anyways, I was hoping today would be the day that I would be able to sell some calls and exit a little bit of position, regain some, ground when it comes to the margin that I took on this account. But I didn't really get that opportunity. It was pretty flat of a day, and I didn't really do any moves at all. I think maybe I bought a couple shares of Maine, and that's about it. So here's the account. I'm sitting at 163,300 in the positive territory. That 300 of that cash is actually the dividend that came in from JD.com, from good old Jingdong. So that's cool. Fairly interesting day. Everybody likes to look at the weekly and monthly, etc. charts. So here's the weekly performance, minus 12%. 3 month is in the positive 0.25. And that's the 1 month. The 3 month is 18.73, but it's really, this is that one rip from the Chinese stocks a while back. So it's kind of skewed, but up 18.73. The 1 year chart is a bit more indicative. It's down 3%. And I think I'm beating the market. The market's, meaning the S&P 500, is down maybe 12%, over 12%. So that's cool. This is the old time chart. Whenever I show this, I have to make sure that I disclose that I started investing in August 28th, 2018 for this account. So it's been like, it's 3.5 years, 4.5, is it 4? I can't do math. Almost 4 years now that I've been doing this account and doing video logs. So that's quite a bit of time. Not enough gains for 4 years, IMO, but I'm working on it. Hopefully it accelerates from here. So that's the all-time chart. I'm going to go over all the positions here on the right. You can see these starting with option positions. In this little box, you'll find out all the information that you might need about the position. So the numbers on the right represents the daily gain in dollar amount and in percentage. I'm going to just scroll through. There's a lot of new positions, but you can pause the video player and review them on your own. You can figure out what's going on here. A lot of leaps, a lot of Chinese leaps. All right, equity position. It looks like my daily chart, and that's because Apple is a big chunk of my account. It's up 1.45%. Everything else fairly flat. Chinese stocks are largely up. JD and VipShop are up like 7 and 8% respectively. Goldman Sachs fairly flat. I tried to sell some calls against my 100 shares of Goldman Sachs, but it didn't take. The price wasn't right. Anyways, it was just a few dollars, and I'm gonna have to wait for a bigger spike up in order to do that. DD was up 11.79%. I don't have much DD. I have only 10 shares. In fact, what I was waiting for actually happened, which is DD is no longer buyable on Robinhood. So as you can see, I cannot actually buy. Fractional shares are currently position closing only. So I can only close really during the market hours. I can't open up a new position in Diddy. But I want to keep this 10 shares to figure out. Maybe perhaps one day they'll be able to list again in the New York Stock Exchange. Until that day comes, maybe I'll just keep them here, or if they appreciate like a ton, then I'll just sell them. But it's only 10 shares, so who cares? The investing tab looks like this. Still at very high margin rate. Margin percentage. I'm sitting at 41.41. So that would be the equivalent of 83% almost leverage. Once this number gets to 50, that means that half of my account is borrowed. Total market value is 278.700. My positions sorted by return. Apple at the top, a few greens. By equity, Apple at the top. And the Goldman Sachs sitting at 42,000, looking to sell a call. Some of these other positions are climbing up in territory here, in rank. But really, it's Apple that's controlling the account right now. Making a really big bet, and I want to make even a bigger bet on Apple if it drops further, but it looks like it's staving that decline for now. Let's take a look at it. Sitting at 133.79. And I don't know, I mean, it could drop further. There could be a flush out, I guess, if things continue the way they've been going. I mean, Thursday, Friday, and Monday were just absolutely brutal. So today is supposed to be a reversal Tuesday, but it was like, it wasn't. It's still a bad day. If this is what a reversal Tuesday looks like, I can't imagine what the Thursday and Wednesday, Thursday, and Friday are going to look like of this week. It's pretty scary. Speaking of the future, how about we check out some futures? This is Alibaba trading in Hong Kong. I think this is the lunch break here. So it's about to close, or it's going to close soon in about maybe 2 hours. I like to use Yahoo Finance for that. That's 105,500, by the way. I know it's a little bit cut out. Let me move it. I like Yahoo Finance. I think the website's a little too cluttered, but the app is actually kind of clean. So I like to use it to figure out what overseas shares are doing at night. And you can also see the futures. The futures are up. S&P, Dow, and NASDAQ are all up about 0.5% on average. You see gold, silver's up 1.34%. Crude oil. You can see everything here that you really need. So that's very interesting. If, by the way, this price here corresponds to, I want to say, like 108 Alibaba in US dollars. So the conversion is not like 1-to-1. It's more specific. It's a weird formula. They just this is actually in, I think, in yuan, and it sells like blocks of 4 or 8 and something like that. So it's pretty weird. But anyway, the formula spits out about 108, maybe 108 and some change for Alibaba. It's been doing very well. Apparently there's some Chinese data that came out that supports kind of the economic recovery in China. And so I think people are trying to like jump on the train, on the bandwagon, and buy that up, especially since the country has not been dealing with inflation. The Chinese took a much harder line when it comes to like the printing of cash, and they don't want to repeat the quote unquote mistakes of the West, right? So they're actually very conservative when it comes to their monetary and fiscal policy. But we'll figure it out. I mean, it's kind of, I'm sure it's very tough for the population because they have lockdowns and they're not compensating people for it, just like in the West and many European countries around the world, etc. So I don't know how that's going to play out. I know that it's very hard to stop this virus, right? So lockdowns are not really going to stop the virus. They might slow it down, but nothing can stop it. I mean, you can't. Just one little problem can manifest itself and cascade through the population like it's nothing. So I would not bet on them being able to successfully stave this off. So I don't know how that's going to work out. I'm actually probably going to look to flip that trade, or at least half of my position, the remaining position. If we get a pop in Chinese equities, I'm going to be looking to flip it over and buy some more main and O, mainstream capital and realty income. So far, I have 910 shares of Main Street Capital, and in fact, if these contracts here execute, I will have 300 additional shares. That will put me at 1,210, which is going to give me a dividend of times 0.215. I'll be getting $260 a month from just that investment alone. So that would be a nice little income that I can reinvest and make sure I grow the account. So it's going to be great. I'm looking forward to it. The only bad thing that could happen is if this fund actually cuts the dividend, which I don't think they'll do, but anything's possible at this point. When it comes to realty income, probably the most solid realty related, I guess, REIT, I don't know, fund. I have 361 shares at the moment. 301 shares. Let's do some quick math here. 361. So still using a calculator. Not that fast with the money, with the maths, as they say in the UK. Times, what is it, 247. That'll be $89 per month. Plus 260 from the other one. That's $350 a month coming in. That's not bad to bolster this account, give it some income. But yeah, I mean, it's relatively cheap. Look, it's same price as it was, let's say, April 2021, and same price as it was, what are we, 62? I guess 2018, November 2018. Yeah, I'm looking forward to scooping up some shares. So that's the plan. I'm looking to sell calls on anything I can here. Even I might even sell call on Main Street Capital if it goes up to like 39 plus. I'm looking to sell a few calls on Apple if it goes up into the 40s. I'm looking to sell a call on Goldman Sachs if it goes over 300. And looking to roll the Smith & Wesson call forward. I don't know if it's going to happen. I'm going to let this one run out. Hopefully it goes over 15 so I can get rid of the position. But if it doesn't, I'm just going to sell some more calls on it. So I got a lot of calls on ahead of me to do, which I haven't done. So if the market keeps dropping and I'm not able to sell the calls, it's going to be very unfortunate. PayPal is looking to be the most disappointing leap call buying experience ever so far. Definitely not doing good on that. Minus 62% or $2,000. PayPal just continuing to drop like a rock. It's not really doing well. But I've got time. It's due January 19th, 2024. So it's still got time to redeem itself. PayPal is now below pandemic lows. So pandemic lows is 86.68. And right now we're sitting at 73.1. I mean, this thing probably has a high PE now. Its price to earnings ratio is 24.37. It's not bad for a growth company, I guess. But I guess the argument is that it may not be a growth company anymore, huh? Why don't we look up PayPal here? PayPal. That's Apple. See how it's doing here. How about overview? Oops. Overview. Well, it looks like it's growing its revenue pretty steadily, actually. The earnings have been topping off a little bit, and they're probably going to be lower this year even. But it's all about that revenue, right? Let's see the quarterly. So we'll look at the financials, revenue this by year. Go to quarterly, and you can see us tiny slowdown, but nothing unusual really. It's usually there's a slowdown at this quarter, so nothing unusual here. I don't know. It seems fine. I know they have a lot of drama with eBay and Amazon and whatnot, but the company's just doing what it's been doing really. I guess it's just repricing of growth and is being measured against the rates. And in fact, speaking of rates, I want to show you something here. You can see the 10-year rate. I guess there's no graph. Oh, there we go. I want to show you the 1-year chart. Look at this. Year to date is up like 140%. It started from 1.6, now it's at 3.5. It's huge. There's a really huge spike in the rates right now. Very interesting that the bottom kind of coincided with the beginning of the rollover of the Chinese stocks. Very interesting to note. So that might be something to watch. Could this be a topping pattern here? I don't know. It looks awfully exponential. You guys tell me. Why don't we make that the question of today, okay? Like, tell me what. Oops, that's just my latest vid. Tell me what you think of the rates. Are they gonna keep skyrocketing in this exponential manner, or are they topping out and heading back down? It means a lot for the entire market, not just the Chinese stocks, but it was especially it means a lot for the US stocks. But let me know what you think about the rates and why. I want to hear some reasonings because I could really use them info. Okay, hopefully tomorrow is a green day, or today rather, as you're watching this. Hopefully today's a green day, and maybe I can raise some cash. I don't know. Let me know what you're doing with your account. All right, peace out.